You've been told the stock market is the fastest way to grow wealth, but how often do we hear about the crash that obliterates savings?
Ignorance can indeed be your biggest liability in investing. Is it possible that you've been conditioned to ignore what's right before your eyes?
Today, we unravel the mystery behind stock market success for beginners. By staying with us until the end, you'll gain access to one of the most powerful strategies guarded by the top 1% of investors. This ultimate guide holds the key to understanding and navigating the world of stock market investing with confidence and profit. The stock market, a complex labyrinth of potential profits and perilous downturns, has been a staple in financial growth. Our journey begins with understanding the stock indexes and their significance in determining market health.
Knowing their nuances is crucial for identifying opportunities.
First-time investors must grasp the basics: what stocks, bonds, and mutual funds are, and how they shape your portfolio. Diversification should be a key element, acting as a buffer against unpredictable market swings. Before jumping in, new investors need to learn about risk tolerance levels. Assessing how much risk you're comfortable with can shield you from making hasty decisions when faced with a market plunge. Time in the market beats timing the market, as historical data shows sustained investments often outperform those driven by market timing attempts.
The magic of compound interest and reinvestment yields exponential wealth over decades. If you find staying informed overwhelming, there are tools and platforms simplifying the process. From robo-advisors to financial apps, technology makes it possible to stay ahead without dedicating all your time. Pause for a moment. Have you liked the video yet? Comment below with your thoughts on the most daunting aspect of stock market investing.
Your interaction supports us in making more content to toggle the leverage towards your financial independence.
Pause, wait. Let's freeze frame for a second.
If you don't get this part, the rest makes no sense. We mapped this out in our previous video, check it out later.
Now, back to reality.
The critical lesson here is the role of psychology in investing discipline.
Emotional resilience is key to handling market fluctuations.
As we delve deeper, institutional strategies come into focus. Learning from hedge fund tactics, such as leveraging options and derivative markets, can offer insight into advanced risk management and return maximization.
Have you ever considered the global reach of the stock market?
Understanding international investments can enhance your exposure to various economies and protect against localized market downturns. Ethical investing is gaining traction as more investors aim for not just profit, but impact.
ESG investing targets companies with strong environmental, social, and governance practices, reflecting a commitment to sustainable growth.
Review regularly and rebalance as necessary, adjusting your portfolio to meet evolving financial goals. Doing so sustains growth and accounts for any market shift that might impact your financial roadmap.
Start small. Use fractional shares or ETFs to get a feel for the market without overwhelming your finances.
This method provides insight without the full exposure to market instability. Congratulations on completing the guide to mastering the beginning stages of stock market investing.
Hit subscribe, and don't forget to click the link in the description for the ultimate money guide to supercharge your financial journey.